Money Vikings, Money Viking G here. Welcome back to the show. Sit back, relax. I got a good one for you. It's about Bitcoin crashing. Is this the end? Is this the end? That's the big question. But I'm going to lay out some perspective from 25 years of investing. And I would appreciate if you would like and subscribe to the channel. You know, a lot of people watch, which is awesome, but a lot of people aren't subscribed. So if you could subscribe, it's like an easy, free way to support Money Vikings, and it costs you nothing. And I promise every week to give you sound, grounded, straightforward personal finance information that can be used to build wealth. And with that, the Money Viking book will be coming out soon, so I'll be talking a lot about that. That will consolidate all of this experience, 25 years of knowledge, into one book, and also a lot of research about how wealth is actually built in this country step by step and in the world. So with that, Bitcoin is down to 78,000 as we speak. So I am buying more. That's my position, because nothing has fundamentally changed in my view, once again, when it comes to the macro level and the state of things and investing. And what I've found after 25 years of investing is that when these things happen, the people will freak out. The monkey brain takes over, and it's telling you to be afraid, to be fearful. You will lose something. You're going to lose. You're going to lose everything. That's what your monkey brain, the part of your brain that is primitive, is screaming at you, because it's in survival mode. And so in survival mode, we're not making the best investing decisions, because investing decisions play out over 5, 10, 25, 35, 45, 50 years. It's very hard for us to live in that or to operate in that. Our brains are simply not wired to operate in that way. We're wired to have survival in the moment. We only live in the moment. We only have the moment. This is the moment we have to take action, is right now. You have no other moment in your life to take action except this second. And that's why when you're watching these videos afterwards, if you take action, you're probably going to build wealth and do quite fine. So Bitcoin at 78,000 is very interesting. So, you know, it is, I just think you got to zoom out once again. You have to look at the long view with Bitcoin. It does this. This is quite normal for Bitcoin. And it's just the way it is. It will go up, and then it will drop a lot, and then it goes up, and it will drop a lot. But the bottom line is that those who stay the course have always been rewarded. Those who are adding to positions during the downtimes have always been rewarded, and that goes for almost any asset you can think of in any asset class. So that goes for real estate, that goes for the broad index funds of stocks, it goes for Bitcoin, it goes for a lot of different assets. Is that over the long run, if you are adding consistently, then it's typically going to do quite fine over the decades. This just continues to play out. It's just, nothing is kind of new about how the world and assets work and investing works. Now, am I saying go into like the weird crypto stuff? No. To me, some of the strange crypto stuff and the random crypto things are like penny stocks. I stay away from that. You always need to be thinking about quality when it comes to building strategic portfolios. Quality must be considered. So please consider the quality of the investment, because bad quality investments and bad quality companies and bad quality crypto and bad quality real estate can be very hard to turn it around. So, what do I mean by this? All those things? Well, bad quality real estate. Maybe it's in a really bad area that has not a very good future. Maybe it has a bunch of environmental problems. That's bad quality, right? Maybe it's a random crypto pump and dump thing. That's bad quality. Maybe it's penny stocks. That's bad quality. So you always need to be thinking about quality in addition when you're talking about building your strategically diversified portfolio, which is what I talk about here. and check out some of the other videos about strategically diversified portfolios, my ride my bike portfolio. That's going to explain it all in terms of how I build my portfolios, which again has worked out very well for 25 years. And, you know, there's always something in the news and something in the world that is quote unquote bad happening. So right now, this moment, we have to remember that this is nothing different. And it doesn't mean that maybe our highest calling is to go out and do something about the bad thing, or to be engaged in it, or to care or have empathy. We should. That is obviously a human thing, human experience. But at the same time, when it comes to investing, bad things have happened every year for the last, we have now over 100 years of, market data, and bad things happened each time. And what happened is it went down a little bit and then it went back up higher, went down a little bit, then back up higher. On and on and on it continues to go, as it will probably go again and again. And will there be crashes? Yes. Will there be dips? Yes. But if a person is dollar cost averaging and continuing to pick up, then they're going to be just fine. So anyway, that's it. Have a good one. See you on the next one. Bye.